Oil tankers are stalled in the world's most critical waterway, and global markets are on edge. The price of oil could skyrocket to $200 a barrel, and your wallet is already feeling the pressure. Let's break down the 5 updates you need to know, because this oil crisis is about to change everything. The Strait of Hormuz is the world's oil lifeline, an artery so vital that its pulse is felt in every corner of the globe. This slender stretch of water, just 21 miles wide at its narrowest point, is the gateway through which the energy needs of continents are met. Nearly a fifth of all global oil, millions of barrels every single day, flows through this narrow passage. Every ship that passes carries not just crude, but the hopes of economies and the stability of markets worldwide. Right now, Iranian patrols are turning oil into a geopolitical weapon, using their strategic position to force tankers to reroute, delay, or even halt. This show of force is driving up insurance costs, making every journey through these waters a high-stakes gamble for shipping companies and nations alike. OPEC's output is plunging as uncertainty grips the region, and the supply shock is immediate. Refineries worldwide are scrambling to secure alternative sources, but the gap is hard to fill. Oil prices are leaping, not creeping, as traders brace for a prolonged standoff. The volatility is sending shockwaves through financial markets, affecting everything from airline tickets to grocery bills. Behind the scenes, world leaders scramble for solutions, racing against the clock to prevent escalation. But every day of chaos deepens the crisis, eroding confidence and making recovery more difficult. Even if the strait reopens tomorrow, the damage is done. Supply chains are disrupted, inventories depleted, and trust between trading partners shattered. The ripple effects will be felt for months, if not years, as companies and countries rethink their strategies. The strait isn't just a choke point, it's a global pressure point. Its vulnerability exposes the fragility of our interconnected world, where a single disruption can send shockwaves across continents. Every headline about Gulf chaos is the first domino in a chain reaction, one that can topple markets, unsettle governments, and reshape the global energy landscape. This is more than international drama. It's the start of a new era for energy prices, where uncertainty and risk are the new normal, and every decision carries global consequences. The world is watching, holding its breath, and the stakes couldn't be higher. What happens in the Strait of Hormuz doesn't stay there. It ripples out, touching lives and livelihoods everywhere. Oil markets are in chaos. Prices swing wildly with every rumor, tweet, or diplomatic move. Every headline, every whisper, and every unexpected event sends shockwaves through the market, making it nearly impossible to predict what will happen next. The uncertainty is palpable, and the stakes have never been higher. Traders are glued to their screens, fortunes made and lost in minutes. The pressure is relentless as they try to stay one step ahead of the next big move. Some celebrate windfalls, while others watch their investments evaporate in real time. The atmosphere is electric, charged with anxiety and anticipation. It's not just about supply, it's about psychology and perception. The market reacts as much to fear and speculation as it does to actual events. A single comment from a world leader or a sudden shift in sentiment can send prices soaring or crashing, leaving everyone scrambling to adjust. Ceasefire hopes briefly calm prices, but new threats send them soaring again. Even the promise of peace is fragile. One moment of optimism can be shattered by a new conflict or a sudden escalation, and the market responds instantly, often with dramatic swings. Volatility is the new normal, and it's rattling investors and everyday consumers alike. People are left wondering how to protect their savings, while businesses struggle to plan for the future. The unpredictability makes it difficult for anyone to feel secure. Gas prices change overnight, airlines hike fares, and businesses scramble to adapt. The ripple effects are everywhere. Transportation costs rise, delivery fees increase, and families are forced to rethink their budgets just to keep up with the latest surge. Hedge funds profit from the chaos, but most people just feel the pain at the pump. While a select few capitalize on the turmoil, the majority are left struggling with higher costs and growing uncertainty about what tomorrow will bring. This is a market in crisis, where whispers move millions. Rumors and speculation can trigger massive trades, shifting the balance in seconds. Trust is scarce, and everyone is searching for an edge in a landscape defined by unpredictability. The uncertainty is exhausting, and it's not going away soon. Both traders and consumers are feeling the strain, as the constant swings take a toll on nerves, wallets, and confidence in the future. For now, volatility rules, and everyone pays the price. Until stability returns, the world will continue to watch, wait, and hope for relief from the relentless storm shaking the oil markets and our daily lives. U.S. oil producers are watching the global market closely, and with prices soaring to new highs, they see a golden opportunity. The recent surge in oil prices has reignited interest and optimism across the American energy sector. Boardrooms are buzzing with strategy sessions, and producers are eager to capitalize on the moment, hoping to turn challenges into profits. Across the heartlands of Texas and North Dakota, shale rigs that once stood silent are roaring back to life. Crews are returning to the fields, and the hum of machinery signals a new wave of activity. The revival is visible everywhere, from the dust rising off new drilling sites to the lights burning late into the night as teams work around the clock. The Energy Information Administration, or EIA, is taking notice. They're raising their forecasts, betting that a surge of American oil will help stabilize the volatile global market. Analysts are poring over data, adjusting their models, and the headlines reflect growing confidence in the U.S. energy sector's ability to respond. But ramping up production isn't instant. There are real challenges to overcome. Restarting idled rigs takes time, and every piece of equipment must be checked and prepared for safe operation. Crews need to be rehired and retrained, equipment must be assembled, and supply chains, strained by recent disruptions, require careful coordination to reboot. Every link in the chain, from suppliers to field workers, must work in sync to bring production back online. Investment is flooding back into the sector, breathing new life into companies that were once on the brink of collapse. Investors, sensing opportunity, are eager to support expansion, and previously shuttered operations are resuming as confidence grows. The U.S. is poised to reassert itself as a global energy powerhouse. Refineries are ramping up, tankers are being loaded at ports, and the American flag flies proudly over sites that symbolize resilience and ambition. But there's a catch. Challenges remain on the horizon. Even with a surge in American oil, it may not be enough to fully offset the lost supply from the Gulf if the crisis continues. The global market is interconnected, and disruptions elsewhere can ripple through, limiting the impact of U.S. efforts. Environmental concerns and regulatory uncertainty still loom large. Protests and debates over drilling practices, spill risks, and climate impacts continue to shape the industry's future. Regulatory hurdles can slow progress, adding another layer of complexity. Some investors remain cautious, haunted by memories of past boom and bust cycles. The fear of overproduction and sudden price crashes lingers, making every decision a calculated risk. Still, every new barrel pumped is a shot at relief for consumers, and a testament to American resilience. For workers and their families, it's a sign of hope and a chance to rebuild after tough times. In this high-stakes global game, the U.S. remains the wild card, capable of shifting the balance, but facing challenges that will test its resolve and ingenuity in the months ahead. Beneath the panic, a deeper debate rages. Are these prices here to stay, or will they crash when supply returns? Analysts are split. Some warn of record highs if the crisis drags on. Others predict a quick normalization. For investors and governments, the uncertainty is a nightmare. Every forecast is a gamble, and nobody wants to be on the wrong side. The market is caught between immediate shock and long-term fundamentals. Both sides could be right. Short-term pain, but potential for recovery. The real question: how long will the chaos last, and what scars will it leave? In the end, resilience matters more than predictions. Rising oil prices are hitting your wallet. Gas, electricity, flights, and groceries all cost more. LNG shipments are disrupted, pushing up heating and power bills. Airlines and trucking companies are adding surcharges, and paychecks aren't keeping up. Developing countries face even greater pain, with budgets strained and food security at risk. Governments are spending billions on subsidies just to keep the lights on. Economists warn of a possible global recession if prices stay high. Political unrest is brewing worldwide as people demand relief. Leaders have few options with supply chains snarled. This crisis isn't just about markets, it's about families and communities facing an uncertain future. The choices made now will shape the world economy for years. The oil market is caught between a supply shock and hopes for stability. Every decision by leaders and traders will shape our future, and our wallets. History shows energy crises spark both pain and innovation. How are rising oil prices affecting you? Share your story in the comments. For more updates, subscribe and stay informed.